Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis methods to oil, especially the Brent edition, and we are going to answer the question, is it the end of the uptrend? I think we should check the charts. First of all, and as usual, let us check the major structure over the monthly chart. We can see it's clear, very clear. It is a very important resistance area over the major structure in the monthly chart. The oil is reflecting from the $130 area, and if we zoomed in a little bit, we can see that there was a shooting star reversal candlestick after a prolonged upward move. We can see this very clear shooting star. Its upper shadow reached around $136, but the close was around $104. The shooting star came after a relatively overbought condition, and this environment, we can see its effect later on. The oil failed to break through the upper shadow for around 3 months before starting to reflect from the resistance around 128. For now, it is very clear that in August, at least the first week of August, sellers are in full control. Let us check the long and medium term pictures over the weekly chart. We had a strong and clear uptrend over the weekly chart. Here we connect the higher lows, and the channel line is connecting the higher highs. So it was, and still, a classical long-term uptrend, but there are some fears that this potential or this once upon a time sideway may be a potential of a reversal pattern of a double top that may cause the reversal of the trend in general. So keep in mind that the support, the weekly support, is around the psychological support around $100. It's exactly at 98.30, but we can accept the reality of the zone that it is around the psychological zone of $100. So a break below this neckline will validate the double top. This validation and this confirmation of this reversal pattern can cause the damage of the whole long-term uptrend. So what is happening now is not a test of the monthly support around $90. It is not a test of the major uptrend from the weekly. It is a threat, not a test. This threat may lead to a joint break of both long-term supports, and this may take place. Such a large sellers, another large sellers candle that may lead to a joint break of the major monthly support at $90, which is also running very near to the long-term weekly uptrend line. So keep in mind that this behavior of this week is showing full sellers control. We are now on Thursday, just 1 day remaining in the trading week, which is going to be the Friday tomorrow, and there are no signs of any lower shadows for this week, such as this one. There are no signs. So this means that sellers are in full control. They do have the upper hand, at least until now. And if things went this way till the Friday close, we do have a problem. Oil is heading downwards if it closed below $100. It will have a big problem if it closed another week below this neckline, and it will be in great danger if it closed 3 weeks below this line and a potential break through the $90 support will lead to medium-term targets around the nearest weekly support, which is the thickness of this double top, or the thickness of this potential double top, which is the distance between 100 to 124, which means we do have a thickness of $24. Subtract them from the level of the break, which means we may target the area of $76. Of course, areas of $76 may range $2 up, $2 down, so approximately we may be targeting the nearest support over the weekly chart, which is around 72.50. So oil is in great danger now, technically, over the short term. Let us check the short term details. We do have a clear, well-established downtrend over the short term, and as long as the oil is performing within this short-term downtrend channel, things cannot go well. Things cannot behave or change its behavior to a positive environment. Things are looking very bearish over all time frames. Quickly, the monthly is showing a Marupuzu candlestick, which is considered a full seller's control candlestick. Of course, the shooting star is still in effect until now, even after 4 or 5 months of trading sessions. Over the weekly chart, the potential double top is almost confirmed. Just 1 week remaining for a complete validation of this reversal pattern. Over the daily chart, things are looking very bad in a very well established downtrend. So all signs in the oil market are showing that things are heading downwards, and the $90 support as well as the major trend line support are unlikely to hold things, and oil more likely is going to break to the downside, heading as a target towards 72.50 area. For that, keep in mind that you should have a bearish outlook. Your strategy is on the selling side, and we may keep watching for signals of virtual trading to the downside by going short. That's it for now. Thank you for watching. Please feel free to like, share, and subscribe. See you soon.